just sort of detail out my criteria for the trade, how I plan to enter. I give examples and stuff, and I'm still kind of tweaking the entry portion and the exit portion and how I want to enter and exit. But I sort of go through the logical thinking. So I'm going to go through that, and then I'm going to go through some of the charts and examples and stuff, so I can give you guys a visual to what I'm talking about.
Yeah, I've got it on my main screen right now, so it's finding it. I guess I'll leave that going as you're going through it. I won't take that off the screen. Okay. I won't take it off the screen until we actually need to go to think or swim for something. But yeah, it's on my screen and I am recording. So
All right.
talk away.
All right, cool. All right, so I sort of named this strategy like a range break failure in the way that I'm looking for an overextension on any sort of time frame where it breaks above a range, immediately comes back in, fails to reclaim, and then flushes everyone out. So I'm sort of, with that in mind, I'm looking for the longs there to get interested for a breakout, and then because there's no bidders there, they all just get flushed out, and I'm looking to capitalize by going short, risking off 5 days or over under that key level that it failed on. So I kind of want it to open beneath key resistance, test it. It can hit like just below it, at it, or above it, and then run above it a little bit. And then looking for it to fail underneath. So there's a lot of different ways that you can play it, and so I'll kind of start going through some of my ideas on how I look to play some of them when I get into some of the examples. But there's a huge amount of potential for if you see like that it's breaking out of a range and it's really overextended on a daily chart, then there's a lot more potential for it on the downside. In which case, if we can identify those, we can try to boost the earnings by, say, putting on put options or leveraging our position with even more capital because there's so much more downside to it. I think I can go through an example of that, actually. So, like, am I pulling up? All right, I'm pulling up DraftKings. So this works with all different sorts of stocks. I'll go through a bunch of different examples. So we see we have this rebound. So it's stuck in this range here, breaks out, and so from this point to this point, had about a 20% bounce with no real significant pullback. And so that it goes up and shoots through this range with no pullback. And then it fails to break out of this range. It's like kind of tests above it, fails, and then there's a lot more downside. First target could be.
Hey, Mitchell.
Yeah.
Are you? I'm still looking at the Word document. Are you showing us stock right now?
Oh, it didn't pull over. Wait, did that?
Yeah, I'm still looking at the Word doc too.
Yeah, I didn't realize you were streaming.
Why is it not?
In fact, this happened the other day whenever you were trying to show me a chart as well.
There we go. Now we can see RWLK 924.
Yeah. Wait, can you see my Thinkorswim platform?
Not yet.
What? So it's only. Hold on. Let me. Okay, so now it should be showing my whole screen rather than. What about now?
There we go.
Yeah.
Okay. Sweet.
You got it.
So I was saying here, DraftKings had this like huge overextension, just shot through all of these ranges. So this is something I'll be looking for when there's a lot more downside. If it has like a really significant run up with no good pullback, that is what leads to a bigger unwind potential. Especially when that overextension is on a really wide time frame like this. So like from July to September, we have this huge run up. So on this day when it starts testing this range, we have to be thinking to ourselves, okay, we could have a range break failure or something of this sort, but there's so much downside to it. it could get stuck in this range and then keep going, or come and get a retracement somewhat within this range and keep going. So we could have targets along the way, right? Like 50% retracement, 100% retracement within this range, and things of that sort. But there's so much more. There's so much potential because our risk can be so limited because it's testing this level, and so this can. But the downside potential on this one is huge. But there's not always going to be downside, so much downside potential on every one of these stocks. But I just wanted to show the huge potential based on DraftKings here.
Okay, so if you take that, go back to that real quick. At that point, well, it came in blurry this time. Darn, I can't see it. There it is. All right, so you've got a trend line drawn there. I can see where it starts way over there on the left, right there. But that candle, that's now that's a resistance candle. And
right.
If you go over to the,
you see it struggled here and struggled candle. Here.
Okay, there's your next one, and now we're there again. However, it wicked through it. Would you have put the trade? Where was your confirmation that there was failure there? Would you go on that wick candle, or I mean, obviously it could have easily gone through the next day. I see you're on a daily chart. It could have gone through the next day. When do you put that trade on short? Would you put it on? Oh, you lost me.
Oh yeah, no, I know. Sorry, I'm going. I just wanted to. I was going to go through my trading simulator, so I was looking for.
Yeah. So what were you looking for?
I was going to go on the day.
Then where would you put your stop? Where would you tell yourself? Obviously in hindsight we can see it worked, but where would you put your stop and say, okay, if it breaks through this amount, then it's no longer a resistance point that it's going to respect.
Right. And I mean, we could also have extra conviction because of how much it's been increasing with not as much high volume in this area. So that can be some extra variable sort of add to the trade. But I'm going to go on, this is September 10th. I'm going to go intraday on September 10th. And I would show you where exactly I would be looking. So this is just a trading simulator that I sort of do practice on and stuff, and then look at charts intraday on certain days. So this would be more or less a swing trade. So we'd be looking for some sort of breakout failure or just some sort of failure at this resistance, right? So let me draw the line in here.
I was just gonna say,
we've identified, we've identified that this top here at like 64.50. That's about where it is.
Okay, so that chart
so we're identifying
bottom left is mimicking the thing swim chart.
This is our yearly. This is our 15-minute, our 5-minute, and the 1-minute. So we'd be looking to see it just come up and test this level. And there's not too much. There's not like super high volume on this chart here. I think like it really wasn't that high of a volume day. 8 million, 10 million, yada yada, and then we have a daily average of 12 million. So it really wasn't experiencing that much volume there. So we shouldn't be expecting to sort of jump right in there. We would definitely want to be using wider time frame charts on this one. So a good idea would probably be the 15-minute of some sort. So we'd be looking for it to come up, test this level, and fail. So we'd be seeing that right off the open. I'll focus on the 5-minute here. It's struggling, it's failing, comes up, creates a lower high, and then breaks away down here. At this point, when it's breaking down late afternoon, I think we can be fairly sure that, we can start to place our bet that this level is going to act as resistance. And so at that point, we can be risking on the break of this level, fails to reclaim, continues downward. We could be risking, so our entry could be around 63.20s to 63, risking off of highs. And then we could be looking for, say, just to be conservative, I'm looking for this area that it really broke out, say a 50% retracement within this channel because it really had no significant pullback. So we could be paying ourselves along the way just to be conservative. So like 62 down to 60, down to 60. If it continues to fail, we can continue to add. But this is definitely a much wider time frame. So I know like Moto, you like to trade on a wider time frame. But for some of us, we also like to trade intraday. Like this, I feel like this strategy can work on a lot of different ways on a lot of different time frames.
It would be good for swing trading, based on
Mhm.
the thesis that you just made. It would help a little bit in determining your entry, and you
Right.
would pretty much know your exit if you're short. Um, I don't know. I don't do a whole lot of swing long trades that are shorts, because you got to still watch them.
Mhm.
You know, you don't want to. I don't want to be in a what would be considered a swing trade on a stock overnight that I have short, and that's personal. You
Right.
guys may not care, but from a swing standpoint, I don't short them overnight. I don't. I'm not willing to take that risk. Your thesis makes sense in that it should have some follow through. So, you know, if I was to decide I wanted to short that, I maybe would play it through options and use a put option or something.
Exactly.
And say this thing's probably going to keep going down. Well, I don't want to hold the underlying stock short. I'll go ahead and short
Mhm.
it with puts. So yeah, that
Exactly.
makes
Right.
sense. What was I going to ask? Oh, how you like that RSI setup I gave you? I saw it on there.
Yeah, it was pretty good.
It works pretty
I
good,
I
doesn't it?
think I was using it. I forget which stock it was, but I was using it on Friday, and I noticed that it was sort of identifying when it was first picking up momentum rather than
Yeah, it it shows you when
dying
everybody
out.
else thinks that it's done, it's actually starting. The momentum
Mhm.
starting, and then you can see on that indicator when it actually is pretty much done.
Mhm.
But it allows you to be on a different side of the trade than most retail traders are going to be on because of what they've been taught.
Right. But I'm gonna keep going. I want to. So like this is just an example of how it could work on a slower moving stock as a swing, but I think this strategy can definitely work um, on stocks with a much higher relative volume on the day. Like you guys remember when I was trading LCID on
Yeah.
right. I had LCID on 922. I think I had that here. LCID 922. So on here, I remember I was telling you guys a lot on the day that it was happening because I felt like everybody thought it was sort of in squeeze mode.
There you go.
So I was looking for everybody to get excited for a breakout and then for that breakout to fail and then potentially lead to this unwind. I got too many lines here, but
Okay.
maybe it'll be easier if I go on the trading simulator on 922.
Real quick, what are all those lines? Is that a Fibonacci retracement or those trends lines that you put in?
I put in all of these, yeah.
Okay.
They're either intraday lines or previous points of resistance where I expect there to be a range. So like you can see, it's just at least it just covers this general area, right? From like here to here, you could definitely tell it was ranging. Sometimes I'll color the lines different colors depending on what sort of
Oh, baby.
importance the line has.
No, I'm
Like
working.
say if the line or there was point of support or resistance was just a key level the day before or the day prior, I'll just highlight it blue. So that way I know it was a key level yesterday. It was not a key level necessarily on the daily, which can be much more important. But let me show you exactly what I was looking for on LCID the day I made that trade and how I made it, because this happened within the first 5 minutes of open. So it has to be played entirely different than you would like DraftKings. Did LCID change its ticker? So it's not showing up on I can't draw the huge resistance, but I'll go ahead. So we had a previous high here. This is yesterday, a previous high here, which is also acting as the pre-market here on this day at the open. So you can tell that this level is going to be really important. And then we had our sort of support area down here at 2650. Go ahead and just move it down to 50. So at this point, this thing is super overextended. It's just squeezing. I think everybody understands that it's just in squeeze mode. But at that point, when everybody gets excited for a breakout, that's when you got to start thinking. We have to start thinking the opposite, and when we can capitalize on breakout buyers getting flushed out. So let me show you sort of how I would play this. So what I like to do is place a 1 lot order. So like 1 lot for me on like a mid float would just be a mid cap, or a large cap would just be like $2,000 worth of capital. So let's see, 2,000 divided by what's the stock price at? I want my first entry to be at like this 28 area. So divided by 28, that's 70, about 70 shares.
What?
What?
Oh.
He's wanting to put a $2,000 value against the
Right.
position to enter.
Just against this resistance, I just want to put it up here and just see and test. And if it fails, I still have other resistance where I could turn this into another trade. There's still more resistance above. If it wants to skyrocket straight to 29, I can go and turn this into a different trade and start playing it as a parabolic. So that's something I would look for too, sort of protection and like a contingency plan. Like I would like for there to be resistance still above the point that I want it to fail at. So that way, if I'm wrong, I can continue to sort of scale in against it and still play my thesis. But either way, so let's say here, so it's in super mega squeeze mode the last 3 days. A lot of volume, so we know it's going to be volatile off the open. It's at the high end of this range, and we know that there's a lot of downside potential. So immediately we have to be recognizing this. There's a big range here from 29 to 26. I'm not sure what terms that is in percent movement, but that's a big range to the downside. But we also have to be identifying points of support that we would be covering at beforehand, right? Like we have to expect, like Nate always says, for support to hold. So we have 2750 as an area in this pre-market. So that would be an area we would want to cover at. And then beyond that, yeah, I guess the next key level would be sort of clear skies beneath 26. So I'm just sort of going through how I want to game plan my entries and exits and my contingency plan right before I start to make this trade, if that makes sense, right? If it wants to, I'm going to go ahead and place a limit order right here. The high is 27.91. That's the pre-market high, I believe. If I can see exactly what it is. High, yeah, 27.90. Okay, 27.90. So I'm going to place an order there. If it doesn't fill, then I understand that it can be weaker than I thought, and I may be willing to chase it a little bit more. So I'm going to go ahead. It's at 5 times speed. I'll just put it at normal speed. It's right off the open. So at this point, I have my contingency plan. If it goes parabolic, you can see from the yearly, I still have resistance at 29. Okay, now I'm filled, and it's testing this level. It's going above. A lot of volume. So I'll go ahead and pause it. So that's sort of a huge breakout right there. So at this point, I want to be thinking, if it comes back, base is here a lot, then I want to just go ahead and probably cut it. But comes back, fails underneath this level, I want to start thinking that I'm right, that my thesis is right. And then the third option, if it just keeps going and going and going to 29, that's just a parabolic move. That's a dollar. Where did it open? $1.15 move on a mid cap stock. I'm not sure what the ATR is for LCID. I could look real quick. But yeah, the ATR is $1.71. So if it goes up $1.15 within the first like few candles, I can go ahead and trade that as a parabolic, and I can continue to scale. Most likely, I'll be adding at like 28, 28.60, 28.75 towards 29, and then on the pullback, I'll be scaling out.
And then you're doing
and
that
reducing
based on
my
the average true range, the ATR.
yes, the average
$1.50.
true range of the stock, right? You want to see if it's going to go at a full ATR within 5 minutes of the open. I can go ahead and assume that that's a parabolic move, that's an outlier move, and I can start scaling into that. Remembering I only have one lot here, so this I really don't care too much. I just want this lot here to test, right? It went up and tested it and went right through it. So I'm just watching here. But with all those variables in mind, I just have to be thinking about my contingency plan along the way. I would like for it to, the idea is that it's going to come down, fail underneath this level, and then flush out all these breakout buyers. That's the idea. That's the initial thesis. But the backup plan is that resistance move towards the instant resistance test of like 29.
So in this particular trade,
Let's go ahead and speed it out.
In this particular trade, you actually allowed yourself to enter short on the front side.
Yes.
Not on the back side. If it keeps running, when does your thesis change and say, okay, that didn't work? I'm now stuck in a trade I got to continue to add to. And at what point do you cut it and say, I'm not adding to it anymore? I guess that's my first thought. Second thought is based on looking at that daily chart that it's been parabolic 6 days in a row. How do you position yourself to get past the same mindset most of us have, where we can play these stocks long and we can make money on them long?
Yeah.
I mean, we're
I
always
understand.
trying to find that top to short them and stuff, and I'm not quite sure how to break that thought process.
But like my idea is I would prefer to get long on a stock that is not super overextended. Like when a stock, like for the criteria for a short for me, I want it to be have an over exaggerated move towards resistance.
Which in this
So
case,
to me on the daily, we have an over exaggerated move towards resistance. When I would be going in to get long, I would want to see like a big move, a lot of volume in that move, and then for it to pull back to support and start to base at support. And at which point, that's where I'd be looking for long entries.
Well, the first thing you used that you used correctly was the ATR. You said, okay, for this 1, 2, 3, 4, 5, 6 days, the average ATR was this, which is average true range. If anybody's listening, doesn't know what that is. So that was your thesis. You said, okay, when it gets to the average true range for a daily, and if it's willing to do that the first 5 minutes, that's a reasonably sound place to enter a trade short.
Right.
That was
yes. So for a parabolic, which is completely different strategy, I don't want to get too in depth into that. I would be placing 3 more lots for in that resistance area, right? Like I would have some limit orders, probably because that resistance area is at 29. I would probably go ahead and have some orders at like 28.60, 28.75. I would want another lot. Say like 28. I don't know, right near 90.
What do you base?
And then if it goes, what am I basing it on? I'm basing it on the fact that it's right near this resistance. I want to be scaling in if it's going parabolic.
So there's no trend lines that you're saying, okay, at 28.80 there's a trend line, and I'm going to put that in as an entry, and then 29.40.
No. Because if I'm just saying, if it shoots up there immediately, that's a parabolic move towards resistance on a really already overextended chart. So I can confidently go ahead and place some more lots in there because I can realistically expect there to be a pullback if it's going to have a full ATR move on an already overextended daily chart into resistance that has been there for a while on the daily, right? Does that logic make sense to you?
Yep,
That's the part of the contingency plan. I'm kind of straying away from the range break failure strategy,
Yeah, makes
but scaling into a parabolic trade has to be a part of the contingency plan of this strategy, right?
Right.
Because
see what you're doing.
if I place one lot here, I don't really care that much. Like if it wants to come up here, bounce around, at that point, if it's just bouncing around right here, finding support, my idea is done. I want this. My idea is that it's going to come through, test this level, fail, flush everyone out, and begin this unwind on this overextension towards resistance. That's my thesis. But I'm just talking about the backup plan. That's why I have these orders here where I would turn that into a parabolic trade, right? That makes sense, right? Like if I would be scaling in here, moving up my average, expecting it to pull back, maybe even pull back towards this high here at 28, and at which point I'd be in the money. But my idea is wrong, so I go ahead and get out and just take that. But and maybe even try to flip long if it wanted to show that much strength. But
So where do you go to find the ATR?
It's on
I
That's
just have it
some-
as a Thinkorswim script.
Okay.
I can go ahead. I can post it in here.
Are you using a script or
I think it's this one.
The actual one Thinkorswim has?
It's a script. This isn't just the regular ATR. I think this is the ATR given the last I want to say it's like 15 or 30 trading days, right? So if there's a lot of recent volume in it, your ATR is going to be expanded. So I want that to be accounted for.
And you want it to
Like,
be a heavier way.
yeah. So if over here, the ATR, I don't know, like what's the range here? 69 cents, 83 cents. Yeah, the range over here is going to be less than $1. But when
You
we have
kind of
all
want
the,
you want the range of the most recent move.
yes, I want the range of these moves because that's where all the volume is. And I'm expecting that. And I'm expecting that sort of volume on this day because I mean you can just tell in the pre-market already, and the day prior we're gonna have a lot of volume. So I want my ATR to be based on recency, right? Does that make sense?
Yeah, that makes sense.
Based on,
or at least the most aggressive days in a relatively
Uh-huh.
short time frame.
yeah. I mean, I can go ahead and post. Do you have Thinkorswim, John?
Yeah, I do. That's what I use for charts.
I think this one is my. Wait, let me just remove it and then see if that's it. No, that was not it. Shit. Oh, that was my volume one.
And then you may have already said this, and I may have missed it, but if you're scaling into a parabolic move, at what point are you cutting it if it's not just a big swipe and then it's going to die? Like, what if it keeps going? What if it has that
What if it
black
just keeps?
swan?
What if
Yeah,
it
it
just
has
keeps
that black
going and
swan.
going?
That's
So
the
Yeah.
magic question.
So when things, yeah, I mean when things go parabolic, my ultimate fallback is with my account. I'm capable of putting in, or I'm capable of more, but like I would like to put in no more than 20 lots, so I can continue to scale. But if I'm really in the shitter, I can start to hedge my position. So like if I have two different accounts, we're really getting into a whole different other strategy with my parabolic strategy. But say it skyrockets to 29, keeps going, skyrockets towards 30. I still want to be adding, but I may be a little bit. I may have a bit more, a bit too much size, and I'm on the wrong side. So at which point I would want to be probably hedging my position on a pullback. So say if skyrockets to 30, if it skyrockets to 30 within the first like 10, 30 minutes or so, that's still a parabolic move. I could still expect some sort of pullback within the day, but I would probably want to be. It gets really complicated with how I would probably want to manage that position.
Sure.
Right.
Yeah.
So,
We can get more into that.
You get like yeah. I mean, this is a whole different idea
Gotcha.
that we're getting into, but it's
Yeah.
definitely worth mentioning. So say, I can mention it briefly anyway. So say it skyrockets past 29 and it's going towards 30. So I have three more orders here? Yeah, 3 more. So I only have 4 lots. If it wants to go up again, I'm going to go ahead and place 10 lots at 30. And at that point, my average is probably going to be above or around 29. And then when it pulls back to 29, I'm in at 10 lots. I'll probably hedge my position on that pullback and probably exit some of my position for a small loss. And then at the same, or there's a lot you can do with that. So say my average is around 20, a little bit of say it's like $29.10. Say it pulls back to like $29.50. I can trim off a little bit of size for a small loss there, and then kind of continue to fight it, or I can let it pull back. And if 29.50 is an area that I'd be covering in, I can begin a hedge. If that makes sense, like my other account, I can buy in 3 lots or something like that to hedge my position. Maybe more if I really feel like it's going to go long. But yeah, that's all part of the contingency plan of a parabolic. But
I think his question might have been directed more towards, and I think the answer to that falls into what is the dollar amount you're willing to sit there and watch yourself be wrong at, and then you cut it.
Yeah, that's part of it too.
Yeah, when do you say it's parabolic? I'm not going to continue adding because now I'm down $3,000, and that's right at my plateau of what I'm willing to be down, and I'll finally accept that I'm wrong and on the wrong side of the trade. I'm going to cut it. The last thing you want to do, and you know this if you've been trading a long time, is change to the other side. Because there's nothing worse than being wrong up to $3,000 and saying, all right, to hell with this. If you're going to keep going up, I'll play you up, and then you switch sides, and then it starts dropping. Then that's when your mental emotion becomes distorted, and you start revenge trading, trying to figure out how you can fix the problem. So I think it comes down. You may agree. It comes down to a dollar amount where you cut it and say I'm wrong. Because what you explained is based on it actually working for you, but they don't always work. Oftentimes they don't.
Yeah, I know. I mean, the thing is, when we're dealing with mid-market cap size stocks like LCID or even like a large cap, you can really expect there to be pullbacks intraday. Right. If you have to play low floats entirely different, you probably need a specified point on a low float where you just have to get out because those things can just go and go and go. Especially when they break crucial resistance and there's not much resistance overhead. But if there becomes a point where if this thing really does give a full ATR, 2 ATR move within the first 10, 15 minutes, I think it's realistic. There's probably over 90% chance it comes back and pulls back. Yeah. You have some profit takers from the swing traders. You have profit takers from the breakout buyers at the open. You have short sellers who are interested in overextension. There's going to be sellers at some point up there. That's why in a parabolic I would just be scaling.
Gotcha.
I would be scaling along the way. That you have to be way more cautious on a low float though.
Right. Yeah. That's
like some
I wasn't really considering. As far as the black swan events are typically the low floats that go into halt mode, and then you're stuck, and the shorts are stuck, and they're still adding, and then you blow up your type of thing.
Yeah. Yeah. But like we have a 200 million float here,
right?
So we can be, So I think we can. And then we can determine based on the float and based on how much volume is trading. Say like 10 million volume comes in 1 minute candle, like, oh fuck, something this is gonna go. Then at that point we can realize we're looking at an outlier, right? So looking at the volume would definitely be something to take into account. You want to see what kind of volume are we tracking for. But if like say it's still tracking for relatively the same amount of volume it had the couple days prior, we shouldn't be too worried scaling to the parabolic, if that makes sense.
Yeah,
It's only like when that real outlier volume comes, you'll see it, you'll notice it, and you need to realize you're really wrong, and you
And
shouldn't be fighting.
you would know that based on pre-market volume, right? Like that's really the only way I know to gauge about what the volume will be like on the day as a whole is what pre-market does.
I
Right?
probably
Or is that a little oversimplified?
probably a little bit oversimplified. I mean, yes, you want to look at the pre-market volume to sort of determine where it's going to be. That is definitely right. But if this thing wanted to go gamma squeeze mode on us, I would be looking for a volume candle above like 3 million within the 1 minute or something like that. Be like, oh wow, someone big is in here and they're going to make this thing want to go. So at that point, we need to be getting out, cutting out whatever size we have, or scaling it into next resistance and then covering the immediate next pullback for a loss or whatever it may be, right? But we're determining, I guess, how much we want to risk on those parabolic moves, and if we could have the potential of being right and have the potential of there being a pullback based on how much volume there is. So I guess the answer would be when do you know you're wrong? It'd be the volume.
Gotcha.
But the volume
But yeah,
continues to
like when
come
you're,
in.
but that's why I really like playing a lot more of these mid caps and stuff, because those 25, 30% moves that happen within 30 minutes, they don't happen on these stocks.
Was this the hot
Um,
stock for that day?
yeah, it definitely was.
Do you try to ever position yourself, and then obviously it would require some kind of scanner to where you find stocks that you actually want to get involved in and trade. Use all your same thesis here, but maybe try to catch it on the front end of the action before it actually gets there, versus taking what you're pretty much doing here is you're taking what everybody's on already and then trying to figure out a great way what you're doing here of how to play it yourself versus what everybody else is doing. Do you ever want to just stay away from that and say I want to design a criteria that when that criteria is met, then I become one of the first people in that stock rather than the chasing
So you're talking about maybe just relying on a stock that maybe doesn't have as many eyes on it,
one. Right.
is what you're saying?
Right.
Yeah. So that would be more of an example of like um, DraftKings, because that was more of an overextension, relatively lower volume on the day. Volume was drying up at the high end of a trading range. Like that's something that you would want to be looking for, where there's not as many eyes on.
Initially.
I'm talking about where I want to make a play off the open, and I want to probably be out by like 10 o'clock or something on this trade. I feel like there's a lot of opportunity in that. But I know like for you, Moto, like you want to play stocks more or less over a wider time
Oh, I
frame.
don't even mind playing the high flyers. I love that, and I'll intraday and scalp and all that just the same. But on the
Mm-hmm.
other side of the pages, I've got all the swing stuff, the longer term stuff, and what I look for and why. But yeah, I'm right there with you on this one. If it's a hot mover, I'll be the first to stand in line and try to scalp that thing.
Right. Yeah.
Yeah.
Because I mean, when we're identifying this, we want to identify the range, the potential range. So we see this range here from 27 to 2750. This would be an area we could be playing in, and we want to be having our entries relatively in this area for potential full move down to this area, and then even more if it breaks. But this is the area we probably want to be covering and cash flowing from here, adding here, and expect this area to hold as support. And then once this area breaks, we can add, and then at that point, our thesis could be right, particularly if there's elevated volume on that break. But let
I
me
don't know
just
if
go
you
ahead.
I don't know if you've ever take the time to back test stuff, but other than AMC and GameStop and just a small handful of them, most of these high flyers, if you look at them a day later, 2 days, 3 days later, they all died, and most of them give it back. So typically, you can have a bunch of these things that over a course of a month just rallied, and you're trying to catch them. You get on the front side, and then you try to get on the downside. If you actually were to take the end of the day when all the thing's exhausted, and you can tell that people are tired of it, if you go back and look at these things 3 or 4 days later, most of them have all died.
Mm.
So
Yeah.
there's got to be a way to say, okay, I'm not going to try to be a participant in the current activity, but 3 days from now, when they forgot about LCID, this thing's going to come back down. So how can I be part of that?
Yeah. So, I mean, at this point, because of how overextended LCID is on this daily, and that these two moves, I imagine, were squeezes, right? Like people wanted to short it. People were probably shorting it here and here, thinking that this would be the top, this point of resistance. So at this point, we probably have some shorts here, expecting it to fail, some shorts here, expecting it to fail, and those people are just getting fucked on these 2 days. So the thesis more or less here is that this move was generated from a squeeze and traveled this entire trading range that it was stuck in for, I don't know, how long was it? Since March till August. So 5 months, and it traveled that in 2 days or 3 days based on a squeeze. Okay, so now, hold on. Now I got the failure here on elevated volume.
Are you still there? I lost your voice.
Yeah, I lost him too.
I think he froze for a second here. He'll be back.
I moved a couple things. I was like, dang it, did I screw this up? Or did he actually get lost? I was looking at that LCID on a chart, and I see the same 1, 2, 3, 4, 5 candles up, parabolic move. But then if you look at the next candle, it went from about 28.5 all the way down to almost 24. So that's what I was just talking about. If you let these things just play their course for the day, they're active stock. Let everybody go away, and then take the thing short. Either if you're willing to hold it short on shares or in puts. The next day and the days following it played down in the 24 range. So it gave $4 or $5 back.
Yeah, that's what I try to do, Moto. I don't like playing the hot stocks of the day. I don't play them very well, so I try to look for something a little less crowded.
Yeah, that's a good way to term it. Yeah, exactly. Wait till the crowd moves on, and then when the crowd moves on, the people that are in it are going to realize nobody has any interest in this anymore. I need to get out. And then you're the one in there that's got it short. Well, everybody's bailing out a day or two later. Where'd Mitch go?
He said he'll be back in a sec. His internet shit out on him.
Oh, okay.
So my not confusion necessarily, but I guess whenever before we got on today, his range break strategy. This is what I was. I guess I was way oversimplifying it in my head. I was thinking by range break he meant it breaks out of like pre-market resistance and then it fails and just comes back down, which is, I mean, that's kind of what's happening here. But on the DraftKings example he used, like he was saying he wasn't entering till it had failed that initial push, came back down, then pushed back up, then came back down again and broke through that bottom range, that support, that initial low a day that it put in. So
That example that he used was a much, from what I saw, was a much more passive trade
yeah,
versus the lucid. So what you're asking, yes, the D whatever it was, DNK or something. That one seemed
DraftKings,
like
yeah,
drafting. That's what that looked a little more passive in that it looks like you could say, okay, here was the pre-market high. It just got there. It didn't like it. And it's going to come down, and you could get into it and not get your face ripped off on the upside anymore. Versus
sure,
the lucid, which was the more aggressive, much more aggressive trade with a whole lot more people involved. And when you were
yeah,
wrong on it, it got real wrong. So
right,
I'm like you. I'd rather play the DraftKings where you can identify, okay, it didn't like this resistance and it didn't like it again, and it's probably going to fail here. And the upside potential on it is a little more, slowed down considerably versus this other trade we're talking about, and you would feel more comfortable getting in it short.
Yeah, I was just trying to figure out what was the main difference between, because it seemed like two different approaches on the same strategy. So I was trying to figure out what exactly was the criteria on those two tickers that kind of differentiated them as far as the approach that he took. If that makes sense.
I'm the type person that I really don't care what everybody else is doing. Not to be disrespectful of the room, I'm saying as far as the mob, the general population out there and what they're trading and stuff, I let them play that stuff and do their thing. I like to write scanners and Thinkorswim or go find stuff that I like that I'm all on my own. Don't care if anybody else likes it or dislikes it. I don't
Right.
care. I look at a chart and I say, okay, this is what it's done. It probably may do it again. So here's my upside risk or here's my downside risk. Put the trade on, protect it with some options, and then forget about the stupid thing. And if they
Yeah.
work, great. If it works, I got several of those on. And then I said, okay, that one worked better than the other one, so I'm going to up my position because this one seems to be working right. That's a little slower trading mentality that doesn't stress you out so much and freak you out to where you're on the front side of a stock, now you're down $3,000. You got seconds or minutes to fix that. I don't like trading. It may be because I've aged and I'm more protective of my capital than I was when I was younger, and then I was working a job that paid well, and so I always could say, hey, I got money coming in, plenty of it. If you make a couple stupid trades, it's not the end of the world. As you get a little older, you become more capital protective. So
Right.
that's another reason I stay away from all this stuff that's going on all day long that everybody else is jumping on board.
Yeah, it sounds like your trading strategy is like mine, Moto. Maybe because we're the old guys in the room.
Yeah, I mean, it's just I've got a risk tolerance, so if I decide to jump in and get involved, I always stay within my risk tolerance, and I'll say, okay, I'll screw around with this with these guys and play it. But if it gets me for this much, then I'm done. And that only has to happen a couple more times, and it makes me realize why I've gone back to the other strategy that I have and why I stay with it.
Sure.
It's just
All right,
it's
Mitch
just
is
not as
back.
stressful. I thought I saw him come back.
Yeah, he's back.
I mean, I wouldn't even mind if we took the time one afternoon or one night for everybody threw in their 2 cents worth and said, "Here's what I think is a really good indicator or a really good something we're looking for on a stock." And if we get 8 or 10 of us that put all those ideas together, and I mean, his stuff's very informative. I like what he's doing here.
Yeah.
And we take
Well, that's why I was interested in this range break idea where he was talking about pre-market resistance, because that's something that I've noticed a lot that has worked, and when it works really well, and typically marks the high of the day. Whenever it pushes up into that level that acted as the high in pre-market and resistance, and then at the open you get a swipe into that level, and when that stuffs or when that fails, I've seen several times it marks the high of day and you get an unwind, like an all-day fader.
Nope.
So if we can figure out when to short
We
those,
hear you.
and I think this is kind
Yep, you're back, man.
I don't think you're streaming it though. I don't think you're streaming your screen right now. It says it ended.
Oh yeah. Because all right, I think the internet should be good now.
Gotta upgrade from dial up, Mitch.
I
Hey,
have
well.
good internet. I don't know why it keeps. Oh, it crashes, but
There it is. Okay.
all right. So I'm going into detail about how to play this strategy within the first 5 or 10 minutes, which is extremely fast.
Yeah.
But it's more or less the same idea on all different time frames, except you have on after 10 o'clock and after like 9:45 and after that volatility, you have the luxury of fighting for better prices um, with limit orders. So, but here, as I was mentioning before the internet crashed, when it fails and slaps underneath and gives like an engulfing candle and fails underneath this support and closes, because we're in the first 10 minutes of trading. I want to see that candle close. So I got 5 more seconds till that candle closes. You can already tell it's going to.
Sure.
And at that point, I'm going to go ahead and mark it in 2 more lots, realizing that my first cover point is down here at 27.50. So I would have marked it. I wasn't paying attention, but I would have marketed it in there. So fuck it. Let's just say I mark it in there because I also want to mark it in 2 more lots on the break of the low of day. Okay. So.
But at this point, some of your entries already are green. You're still not at a break even. Well, you might be. I didn't look at it closely. But some of your entries towards the top are all now green. Would you say you're
What do you
adding
mean?
back some of them? Have you already pulled some off?
Well, he only has
No.
1 lot in right now.
Well, it's so blurry I can't read it. I didn't know if he had
It's
more
blurry?
to enter. Yeah, all your stuff on the right's so blurry. I can't see what the numbers were where you would have there.
So right now
Yeah.
I had 1 lot here, and then I had about 4 more lots.
None of them filled.
But those
Up
never
near,
got filled.
up near that. Yeah, I never got up there. That was just in case. That was a part of my contingency plan in case it went parabolic, and that's when we went on that tangent. But right now, it's starting to prove me right. It's by failing underneath this, giving an engulfing candle, and I went ahead and marketed in 2 more lots here. My goal is to get in 5 more. Is to get in 5 total lots. So I'm gonna go ahead and place limit orders at VWAP. Let's say 2780. I'm gonna go ahead and delete these contingency plan orders.
So those didn't happen.
Because now that I'm going ahead, now that I'm scaling in here, I have a defined risk level, and to me, it's not high of day. It's if this area bases.
That resistance, right?
If that makes if this area starts to base at all, like if it starts to put in some consolidation candles in here, I'm gonna assume it's gonna perk up and go. But I'm gonna
So
go
it
ahead and
could
place.
it could push to that level and even break that level, but
Yes.
you're not going to get out unless it
Mm-mm.
comes back and
If it
starts
if
to
it
base
does,
over it.
mhm.
Gotcha.
If it does a complete 180 and gets back up in here, within like a candle, I may even add up here a little bit, and then watch what it does when it comes back down here, because it's all about like how it got there and to that point of resistance. Because if it comes down here and flies back up, you're gonna have longs covering, you're gonna have short sellers interested, a lot of different people who would be on our side. So we don't want to be covering necessarily into huge dramatic move against us. We want to take advantage of huge dramatic moves towards resistance.
Right.
But
All right. So you said you're
but I
adding
think I'm gonna.
you're adding more positions to fill short at certain areas on there.
Yes.
So
Mhm.
you're gonna
Because right now,
if it continues to drop, those are going to fill for you. At what point do you change those from in your mind or your chart or whatever it is you're looking? Where you change those from positions that are adding to a short to covering your existing short, saying, okay, I'd rather get out here than add here.
so I'm gonna go ahead and start and place these orders here. If they fill, at that point I would have probably 5 lots around VWAP, and if it starts to base around 2790, I'm either going to just completely cut it and get out, or scale back down on lot, if that makes sense. And so take a or scale down to 2 lots and take a small loss on those amount of shares, if that makes sense. So it's not just about when exactly I just completely cut it. It's where I want to start to scale and just sort of judging my risk based on how many lots I have in. We're going on so many different tangents here, but they are good questions and they're worth asking. But I just want to go through it in a relatively straightforward fashion here. So it went from one end of this range to the other, and we're going to assume that this area at 2750 is going to hold. So I want to be taking some off at 2750. We'll place it just in front. Yeah. So right now I got in 3 lots. So I'll probably take a lot and a half off or so. So just like half of my current position off at 2750 to assume that that's going to hold. It already hit that level, but hold on. So there, now only have 100 shares at this area. So this is this key area that I'm expecting to hold, but if it continues to break within the first 5 minutes, so my signal is if the candle closes beneath this area of support, I'm going to assume it's going to continue to wash out.
Sure.
Which it looks like I'm going to bring the
On
timer up.
daily,
So yeah, I'll have 30 more seconds to assume. All right, it definitely looks like this area broke and is going to break. It just dropped a shit ton. At this point, I'm only a lot and a half in. This can happen, right? It can, but you don't want to chase with too much size. I'd rather chase with a smaller amount of size. Like I'm going to chase with only 3 lots, and then if it really gets away with me, like, oh shit, I wish I had more. Well, it's better than chasing it with all of my size and then having it reverse against me. Like I'm going to be relatively conservative with how I get in with the rest. But right now it's getting away from me on this break. You know, I'm still more or less deciding on how I want to enter all of these things and get out. So at this point, we're going to finish below this key area. We're already breaking 27. This area is a very likely target. So I want to be getting all pullbacks. I doubt at this point it would even be going to reach VWAP. So this would be this area that I would be expecting it to fail at, this previous area of support, this pre-market area of support from 2730 to 2750. So that's where I want to continue to scale. So I'm going to move some limit orders down there. What did I say? 27, like 40. Or is it 30? 2730. I'm going to go ahead and say put 2 lots there. 27. This level's 50. 2745. No, these are areas I'm adding because I'm right. Yeah. And these areas at VWAP, I'll go ahead and leave those there because if it wants to skyrocket through there, I want to be adding there anyway because that's an overreactive move into resistance.
So you basically set up 3 additional entries on the front side. They didn't get filled, and now it's on the back side, and now you're willing to take fill
now,
on the back
yes.
side as it bounces a little bit. And
yep, as it bounces, because we had the break of this range, complete failure through this range, and then a complete elevated volume break of this area of support. So at this point, yeah, at this point, this thing is breaking down, and I want to
participate in it.
Yeah, I want to anticipate that all these bounces are going to fail because that was my thesis, and my thesis so far is confirming me right. So I'm going to go ahead and assume that this is going to continue to fail. So within the first 15 minutes or so, I like to add for continuation. Otherwise, after 10 o'clock, I'm not adding for continuation. I'm going to fight for my order so I get good prices. But at this point, we broke 27 and we got a low here of 26.89. If 26.89 breaks, I'm going to go ahead and add 2 more lots in because I still have another 40 sits of downside here that I want to get in for.
Right.
So I'm going to have my finger ready to add 2 more lots on the break of 26.89. I'll be watching the level 2 for that.
So you're adding them at the same time.
Yeah, no. Well, these orders are still there. I'm hoping these get filled. So far, they didn't. I only have a lot and a half from up here.
And Mitch, can you say that again? You said in the first 15 minutes you're looking to go ahead.
Within the first 15 minutes, I like to add on continuation and for continued weakness. So like meaning like if this
kind of building into your position.
Yeah, like if this level, like if this breaks down here, at this point there's a lot of people, a lot of swing buyers who are probably realizing that this is or swing longs who are realizing that this is probably the sell-off day. You have breakout buyers who are getting flushed out. You had support bounce buyers right here who just got completely flushed. So at this point, I'm realizing that that sellers are in control. And within the first 10 minutes, I'm okay with chasing it down. Especially right now with an average at 27.72. My average is up here above VWAP. So I'm okay. If I add another 2 lots, I can roughly do the math. My average is going to be around this area where I already expect it to struggle.
You're
So if that makes
allowing
sense,
yourself to play the back side of the trade and
yes,
participate in it. And,
yeah.
you're not,
I would really like for it to come up here, bounce a little bit here, and then just completely start to wash out, because then I can get these orders at these higher prices. But because we're within the first 15 minutes and it's so volatile and we're so overextended, and for the reasons I outlaid with all the reasons that people could be selling, I'm willing to go ahead and add. So I'm watching here the level 2 at 26.89. If it wants to continue to break, I want to see this candle close beneath it.
and even if it went all the way back towards that top, you still wouldn't have to tell yourself, well, now I've participated in a front side move again, because it wasn't.
Well, it depends on how it gets there, right? If it slowly starts steadily
Right.
climbing, and then it's 11 o'clock and it's back up here, I don't know why I wouldn't be just adding along the way. If it's it's all about how it got there. If it skyrockets all the way up there, if it skyrockets $1, yeah, I want to be adding into that. That's an over exaggerated move to the long side, and I can expect there to be a pullback. So yeah, I would be adding if it skyrockets back up there to highs. But if it steadily grinds, comes back here, tests here, finds some support here, comes back here. No, I'm not just going to keep adding up here and assuming that this is going to be resistance, if that makes sense.
Right.
It's all about how it got there. So right now, for continuation, because my next target, I'm thinking 26.50 is my next target. Sellers are in control. So if this candle finishes below this this 26.90, I want to go ahead and add some more lots in. And it looks like it's going to.
What you're talking about makes a lot of sense, and and I appreciate.
So adding there.
You doing that.
So now I have a little bit more than 3 lots. If it comes up here and tests this area, I'm still willing. So let me go and tell you what I'm thinking now. Target point, I want, what do I have? I have 70. I have a little bit more than 3 lots in. So I want to probably, I'm not even sure how much I would want to take off. Let's just, for simple sakes, let's just say I take off 2 lots at my target. 26. Let's say 52, because I want to beat the other people. So at this point, I have ads here in front of this area. And if it comes up here and fills these, my average will still be at this area. And if it reclaims this area and starts to base here, that's when I'd be scaling out a little bit, because this is where I expect to be resistance, right? So you can notice how I'm moving down my expected area of resistance, my area where I expect it to fail, as the chart, as the trade plays out. So like when I first entered, I expected 27.90 to fail. That's why I had my first lot there, and it skyrockets above it. I have some more limit orders towards 29, because that's where I would expect it, if it goes parabolic, where I would want to continue to add. But it didn't. It flushed. It's starting to prove me wrong. So now I expect this to be resistance and hold. It flushes through here, I want to be getting ads in, and I'm going to expect this level to hold as resistance. So you can see sort of mentally where I'm keeping, not necessarily my stop, but an area where if it starts to base at, I'm going to start to think that I might be wrong. Does that make sense?
I was just fixing to ask you that. You're doing all this with a mental stop in your mind. You don't actually place a physical
Yes.
stop to get yourself.
No, I don't. It's especially right at the open. I don't want mental stops, because it can just, these market makers can just wiki right out, and then yeah. But so right here, I added more for continuation. Sellers are in control. Everything I seem to be doing is, or everything I thought it was going to do is right. I want some covers down here at this next area of support. That's my next target. I want to be adding up here, expecting this to be resistance. So I'm gonna go ahead and just play it out at like 3 times speed.
And so, are you always using 1 minute on the open?
Yes, within you got to be using 1 minute with right at the open. But then after 10 o'clock, I definitely prefer to be using the 5 minute and only be using the 1 minute necessarily for my precise entries. But the 5 minute is more or less what I want to be looking at for my for the overall trend. Okay, so I just got filled some there on this area. So I'm expecting this area to hold this support. If this area just completely fails and it flushes here, like if it gives a dramatic move down here, maybe I'd even be expecting this to become resistance and I could place some ads here. But right here, I only have a little bit more than one lot. With this one, this is an example of how it really got away from me. It really didn't even give that much of a bounce. But that's okay because it gave a huge percentage move on like 3 lots. So I'm okay with it not having quite as much size. But maybe there's a way I can tweak my strategy where I can get in for more of these moves. But so right now I would be expecting this area to so like I would be expecting this area to have some area of support and be expecting some sort of bounce. I would want to be adding I'm just going to delete all my limit orders real quick so they get out of the way. So average is just below VWAP. I would be wanting to add on any tests of VWAP, tests of this level, and tests of this level. And if it gets up there even faster, I would want to be adding more up here because I'd really, if it gets, say we have a move up there within like 4 or 5 candles, it's all about how it got there and how fast it got there. Because the faster it got there, the more likely it is to have a faster move back down.
So that's always been a confusing aspect for me, and maybe we can get into this on like when talking about it later. But as far as seeing a fast reclaim of a support level that was broken, like we just saw this flush out through support level after support level, and then those levels become resistance. But if you're saying all of a sudden it swipes up and just breaks resistance, 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 and is pushing over VWAP, in my mind, how do you differentiate between
strength and
yeah,
squeeze?
this is just a squeeze out versus no, this is a legitimate reversal and there's strength coming into it.
I mean, to me, when have you ever seen a reversal happen like boom, 5 candles, and then boom, it's taken off? Never. You really see it kind of go up, down, slowly keep shorts kind of involved and interested, and then it takes off. It takes time to build, and it takes like time and momentum. But when we have exaggerated moves into resistance, you can like that's the whole idea of the strategy. Whole exaggerated moves into resistance we want to take advantage of.
Sure. So you're saying you would expect that move
let's say
to come
to
back
fail.
in, but if it started making like a higher low after that move and started to build, then that might change your thesis.
Yeah. So right now we have a mental area at 27. We have VWAP at 27.31. We have this previous level of support at 27.50, and we have the previous pre-market high range of 27.90. So let me just kind of go through how I would kind of be planning to add maybe some contingency plans along the way here. So I probably expect 27 to give it some trouble. So I'm going to place an order at 27 or 20. Oh wait, 26.96, just in front of it. So I'm going to place one lot here. I would expect it to find some trouble at VWAP. 27, 25, just in front of it. It's really weak, so I'm going to go ahead and place it in front. If it really wants to come all the way up here, I would probably expect that. I would really expect that one to fail. So I would probably place 2 lots there, or maybe even sometimes I'll split it up like 27.20 and then 27 like 52. But these are relatively the same entry. And then if it went all the way up there, I would be going ahead because that would be one more I would already have 1 lot in, 2 lots, 3 lots, 5 lots. And if it wants to spike all the way up there that quickly, I'm confident that it would fail, like really quickly. So I'm gonna go ahead and place limit orders. 27, maybe like 85.
Is there a max number, like max size for you, like max number of lots per trade?
I like for right now, I prefer to be in like 5 lots. And then if I see a really good opportunity, maybe I'll get it 10 lots as my max size. But then I'm always, my account is more capable of that, but I only want to use that size if I really need to. Right.
Sure.
So I have that size available to me for my contingency plans if it wants to go stupid and do the unexpected, you know?
Right.
So this is more or less, I just have these orders here because that's more or less the areas I'd be thinking it would fail. Right now, I still only have 1 lot in. And then we also have downside now to $26. I'm gonna go ahead and just draw that in. So I have to be thinking about just identifying ranges along the way. Like I could be expecting it to hit, or is it 26? Wait, no, it's up here. It's about to hit 26. And then the level beneath that would be like 26, 25.70. So now it's just really breaking down. And it's not even giving me a chance. But as you can see, I'm only 1 lot in. And just from my 1 lot, this isn't even taking into account the I don't even remember, where did I took off 2 lots right here, right? I also took off 1 lot from right here.
Yeah. So you've already paid yourself.
Yeah,
I
I paid myself here. I paid myself here. I only have 1 lot, and I'm like, oh shit, man, I can't get my fills. I can't get full size in this, but like, it's still raking up money because I'm so right. Like, which is so it's not really that bad of a thing if it's not filling me.
Sure.
So yeah, and this is just going to keep going. And at this point, I remember my thesis was it's going to fade all day, or I thought it might fade all day. But if it really wants to give this dramatic of a move all the way down to this resistance point at 26.75, or what is that, 25.75, I would probably pay myself a little bit more. But I would expecting, because right now it's super weak, all day fade thesis because of this overextension, right? I mentioned, I think this whole move through this entire range was generated on a squeeze, and over exaggerated squeeze moves to resistance. You can expect some pretty good downside to that. So all day fade is sort of the thesis here, and I want to be adding on pops at areas of resistance. So mental area, VWAP, this area of support resistance up here and resistance up here. But it flushed even lower, so I may even want to get ads even sooner. But that's more or less how I scale. I would want to be scaling along the way. I'm just going to go ahead and cancel all these and see where it finished. All right, so it came back up to VWAP, never got to this area of resistance. Look at my 1 minute. So it got 50% of the way through this trading range, right towards VWAP, failed, like I would have been adding here. Having some limit orders up here if it even wanted to go up here. And then I would probably be covering a little bit down here, expecting a higher low and maybe a recovery. So again, just paying myself, but as it continues to fail, I'd be just continuing to add on pops. So like once it fails this level, I want to add on another pop. So VWAP and this resistance level could be another level. And then I would want to be expecting these areas of support to hold, paying myself along the way. And then maybe even for super exaggerated moves, covering the whole position. So that's just one example of how it can work within 5 minutes. And then if I'm really right, it sort of turns into another trade of adding to pops along the way at points of resistance. And I would be adding, if it wanted to give a huge spike all the way back up to here, I'd really be adding. Because when do you ever, like, you'll see like a U-shaped, a cup and handle, and then it takes off. But when have you ever seen like boom, boom, and it just goes right away? You'll see super big reactions to one side usually have a pullback. So if it wanted to keep going up here, I would just keep scaling and assume it's going to fail. And then maybe I would have a little bit more lots than I would like. Then I would just take them off when I'm in the money and it pulls back towards VWAP. But that's getting a little bit into how the trade unfolds for that initial move. There's so many more examples of how these things can work. And I archive, I take screenshots and I archive all of them. Even if I don't play them, I'll archive them and I'll throw them in this document, and I'll study them, and I'll figure out what variables I need to be paying attention to as to why they're working. So I've been mentioning that these overextensions within a daily range, they sort of provide the most downside. So let me look at, I know I was mentioning it to you, John's SPCE.
Yeah.
That's not a good chart. Let me go to the 5 minute. Delete my alerts. Maybe not the 5 minute. Because I can't really see it anymore. But what I want to be looking at is this day right here, Monday. Look at 30-day 1 minute. So this day, we have, let me give you a broader picture of what sort of range it's stuck in. Right, we're stuck in this pretty tight range here. So when we have, I'm just saying, giving an example as how this can sort of work for all different ranges, no matter the size. But when you just have a super over exaggerated move, those have the most potential, and those should really be our focal points. But I just want to show also that this can work in a much simpler fashion, right? It's been trading and bouncing around within this range for a while. So we have dip buyers and of sorts that are buying here at support, and then maybe we have a breakout buyers and things that are expecting it to break out of this range and then continue the upside because this thing is so depreciated. So it's all about also kind of creating a story as to what you think the stock's going to do and why, based on what you think the buyers are doing in terms of swinging, in terms of intraday breakout buyers, and things of that nature. So let's say the story here was it's just bouncing around this range, right? I had this range drawn out. It's sort of just bouncing up and down within it. You have a pretty exaggerated move from one end of the range to the other, and then the next day you have a range break failure. So right here, it's a little bit more evident on the 5 minute because there was not that much relative volume here. But you can see it goes up, tests, flushes beneath on elevated volume. See down here, I don't know how well that comes out for you guys. We have an elevated volume flush, VWAP, which was previous support, becomes resistance, continues to wash out. So you can see how maybe you would be thinking, okay, one limit order here, flushes down. Okay, we might be right. Some more limit orders. Maybe I want to be getting in 3 lots total, or I haven't seen confirmation yet. So yeah, maybe I'd be wanting just to get in 3 lots. I'd be placing limit orders back up here for testing it. So say I get a limit order up here because I'm expecting it to fail. Just let it watch around, do its thing. It fails, and then after that failure, I may be wanting to get in three lots per se. I don't have too strong conviction on if this idea is going to work. 3 lots around this area, and because it's after 10 o'clock, I can place limit orders and just kind of let it bounce around. And also, there's not that much volume. There's no need to chase. There's no need to add 3 lots down here, expecting it to wash all the way out. At that point, I would have ruined my average, and I might be a little bit worried as it's testing this level again. So you have to understand the context of what time you're playing at and how much volatility is in it. There's really not much volatility in this at all. This is probably not even a trade I'd be looking for because there's not even that much downside potential. But I just want to show how this works on all stocks, on all different ranges, and all different time frames. So right here, maybe just to keep the thinking and my entry ideas aligned. 1 limit order on the test, right? Because this is the range. Broke out yesterday, the day before, I think in pre-market. Yeah, but then came back, failed, or opened up beneath the resistance, tested it, failed. I'd be placing limit orders, say 3 lots. Fails again on elevated volume. Probably won't be wanting to get ahead in 5 lots because now my average would be up here. I could go ahead and get 5 lots in here, probably bringing my average to around here at like 25.75 or something like that. I'm going to assume low of day is going to hold. That's a support point. So the test at that level, I'm going to assume it's going to hold. But as it continues to fail, this one doesn't really provide any good pops to add into. So maybe I'd just be letting the rest of that work. But it's all about just identifying points of support where you want to cover, like maybe there, and identifying points of resistance where I would want to be adding along the way. So I got one limited order in here. It fails here. Okay, as it's failing, I'm going to expect previous support to become resistance. So let me just this area was support, and it's also VWAP. So you can naturally assume that VWAP is going to be support, and this price level was support. As it retests, I'm going to assume that's going to fail. I want ads here, and then so that's more or less just how the strategy works. Is just as it's failing and as it's proving me right, I want to assume previous support is going to be resistance, and that's where I'm getting my ads. Unless it's that first 10 minutes where it's extremely volatile, I'll be chasing it, but only chasing it a little bit. I'll only be adding a few lots and then placing limit orders, hoping those get filled. Does that more or less make sense with how I do my entries?
Yes.
Let me give you another example. I just want to show quite a few examples here. So we have F cell. It doesn't really. How do I zoom in like a square?
You gotta click the bar on the right side real quick.
What?
And shrink your. Go right. Yeah, go up, right. Go now. Just go straight to the price on the right. Just go right just a hair. Just adjust that just a hair real quick. There. Now draw a square.
What? Wait.
Oh my god.
But how do I get back down there?
Hold control and move the price up.
Hold control. Oh.
There. Now draw a square.
Okay. Wait.
Now draw a
this'll
square.
work.
Oh,
shit.
okay.
Oh
Shit.
shit.
There you
That's not what I
go.
want. That's not exactly what I
What do
want.
you? Just zoom out once
A
now.
lot of it's getting in trouble because you're using the drawing pencil rather
Oh. Okay. So we had a huge
That was
volume.
rough.
So we're at F cell. There's still a lot of resistance overhead. A huge volume day there. I think it sort of trapped breakout buyers, flushed them out, but it definitely found support at $6 here, and then started to take off. And then as you can tell, there's a good amount of volume in it. It's overextended within a range, and there's plenty of resistance overhead. So boom, right away, that's something we want to be thinking for a range break failure as other shorts may be interested in it here as it's overextended into a range. It's made a good push from $6. You might want to see profit takers off the open there. So for those reasons, we want to be joining or potentially joining the sell side if this thing sets up. So right here, I drew in a blue line. Shit. I didn't make this trade, but I just I screenshotted it because it gave a good example. But you can see within here, within this time frame on the 15-minute, we're pretty overextended, given that this is all it did within the last few days. And when it makes this kind of move, overextension towards this resistance, and we also have VWAP Boulevard up there. I like having multiple levels of resistance up there. So if it were to go parabolic, I can play my contingency plan of parabolic, right? As I mentioned before. But so we had a key level here at $7.17. I drew this as a blue line just because this level only has significance on the intraday. So I went ahead and just made it blue because it's not quite as important as maybe these other key levels. And then also VWAP Boulevard, I make a dashed line. But so yeah, so this area was resistance here, broke through it, found some support here in after hours, was resistance again in pre-market, flushed down. So right here, our thesis could be it's overextended. We want to be scaling in at resistance. Okay, right? So we want one limit order at this resistance just to test it. And then we have another resistance right here at 730. I'd probably place another few limit orders right there. And then we have a previous high of 755, and then we have VWAP Boulevard at 762. Lots of resistance overhead, lots of ways to scale in. So I'd probably be placing one limit order there. I'd probably be placing two limit orders here at 730. And then a move towards 750, I'd probably be placing 4 or 5 lots up there, and then even more, I'd probably be placing another 5 lots up there in case it goes parabolic all straight off the open. Keeping in mind that the ATR of this stock is 53 cents. So if it went all the way to $7.60 right off the open, that is in the open from $7 to $7.60. That's more than an ATR move right off the open. And I just have limit orders there in case that happens. So because if it goes a full ATR beyond the full ATR move within the first 5 minutes, I'm going to strongly assume it's going to have a pullback. Does that make sense? I'm not just adding, assuming it's going to fail. I'm logically placing my lot orders strategically at different sizes, 1 here, 2 there, like 4 there, 5 there, so that I'm properly scaling into the front side and I can cover into a washout. So that would be my contingency plan. Just want to highlight you always have to have a contingency plan with this thing. So I would be having limit order, especially because the trend is up. Like on this last few days, the trend is up. So you have to have that contingency plan if it were to go there. But I could be fairly confident with that much resistance there at this 750 area and even VWAP Boulevard at 760, where it also sort of peaked out and failed. So let's say for here, I had limit order 717 fills, and I get an elevated flush, a volume candle with elevated, excuse me, I get an elevated volume flush beneath this, and then it retests. So I'd probably be wanting to place probably 3 limit orders or so. Well, this is within the first 5 minutes. So on the failure of this level, I'd probably be marketing in some here. So I'd probably have 1 here. I'd probably be marketing in 2 here, just in case it just wants to go right away and not give me a chance. So I'd be 1 order here, 2 on the immediate flush, watching the level 2 when the candle finishes beneath. And then I'd probably be placing 2 more right at this resistance level, expecting it to fail. And then if it bases for too long, I'm going to just get out or scale out. But I'm going to go ahead and just assume this level fails. and then it continues to wash, identifying points of support where I want to cover. You could look at, I mean, this pre-market's pretty, there really wasn't much volume in this pre-market. So I don't know how.
Hey, Mitch, speaking of volume, you've said elevated volume a couple times. Like, what exactly?
Volume just in terms.
Because I'm looking at those volume bars, and they still look semi-weak to me. So, do you have like a, like what exactly do you consider elevated volume?
It's tough to say. Like, obviously, if this volume was completely engulfing, then be like,
Sure.
yeah, okay, wow, I'm definitely right. But
Right.
if I'm not, the idea can still be right. Even on, I'm just looking for potential marks or variables that could be making the trade prove me right or prove me wrong. So if I see elevated volume on a break of support after testing this level, which I wanted to fail at, I'm going to go ahead and start to assume that my thesis is going to be right. Because that, I mean, that's essentially what we're all doing in the market anyway. We just have to capitalize on our plans and our thesis. So when you're looking at these variables, you kind of have to not necessarily assume you're right, but take an elevated sell volume candle as an assumption that you could be right, because I mean there's not much else to go off of. You have to um, assume your ideas are right to an extent while you're playing them. Otherwise, you just have to accept the risk and cut it if it starts to base here or goes too parabolic against you when you're too sized in.
Yeah, that makes sense.
So like say we would all be trading this, and that's even something I would like to be like discussing with you guys along the way, like while we're trading them. Like say we all placed a limit order here, and we watch it and we say, oh, okay, that was a decent amount of volume right there on that failure of this key level. Like, what are we thinking here? Are we marketing in? It's like, no, maybe we should just place our limit orders. It's moving relatively slow. We just place our limit orders, play it relatively conservatively, and we'll add on some more continued failure. And so we see even more sell volume here
Market data
on the break of this
lost.
support.
Right. So
it failed that. Yeah. So we're seeing further confirmation. So at this point, I want limit orders here.
And I can't remember who I heard it from whenever I was first kind of learning to trade, but basically the more volume that comes through on a level break, whether it's a break of resistance or a break of support, this is the perfect example. The more volume that comes in on that support break, the higher likelihood that support is going to become resistance.
Yes.
And you can see it works perfectly in this example.
Yeah, because there's emotional attachment to it. There's a lot of people placing orders around that level. That's all that's saying, really.
Yeah.
So to me, maybe I'm going to just assume, because I always like making a story as to what's happening. So the market action makes a little bit more sense to me. So we had a lot of volume coming up here, breaking this key level. You know, everyone's capable of drawing lines. Everyone could see that this was resistance and support here in pre-market. So now you have continuation buyers that are probably buying at this point of support, risking off VWAP, looking for a target of yesterday's highs at 730, right? That would make sense. That would be a logical trade. Right, from if your entry is at like 717, 720, risking 5 cents for a move to 730. So I'm going to go ahead and assume that this flush out right here was those buyers that were buying for this breakout continuation and overall trend to continue getting flushed out. That's what I'm probably assuming that candle was and that volume was.
You seem very like intuitive in your trading and in your thought process, like as the trade. My brain does not do that, or at least right now, I'm not very good at creting that narrative.
Story.
And, yeah.
I mean,
so definitely something
it definitely just it comes with time. I've been staring at the markets every fucking day for the last year, just watching all this price action, watching all different sorts of news, or watching all different sorts of I guess, learning videos and things of that sort, and taking in and absorbing as much as I can. And I guess it really came to me when I saw Nate talking about his trades. He's always, you could tell he's always creating his thesis based on where he thinks longs are stuck or shorts are stuck, or
Right.
what happened at this level or key level right here. Like, oh, they pulled the goalie at that level. The market makers, they pulled that offer. They swiped out all those shorts with their stops. Right, he's making logical sense as to what's happening with the price action. Even though if he's not necessarily right, that's how it makes sense to him, and that's how he's going to trade accordingly. I could be wrong. I don't. Who knows if that's what actually happened right there? But
Well, no, I
that's
think
how I'm gonna. Yeah, that's just how I'm gonna make sense of it, and that's how I'm going to make my play. You know.
yeah. And Nate's not the only one. I know I've several professional traders that I follow on Twitter. They all say the same thing. Like the key is to find where longs are stuck, find where shorts are stuck, and then you use that to your advantage.
Yeah, we take their money. That's
Yeah.
essentially what we're doing.
Yeah.
Mm-hmm. So,
Yeah.
so in this, like, the point of this here, we're overextended. So we're not looking. So right now, we could be looking to take advantage of breakout buyers that we're looking for a continuation on this trend. We're also looking to join the profit takers on the people who bought down here at support, and we're riding this move up. So we want to be on the side. We want to be short to capitalize on all those sellers, if that makes sense. And that's really all this strategy is. And the more sellers that are on our side, the stronger these moves can be. Right, when it's super overextended within a range, you're going to have a lot more people on the sell side, a lot more profit takers, a lot more breakout buyers getting flushed because the move was so emotional, and they may be bag holding, and that unwind can happen a lot. Can be a lot more prolonged than you expect. So yeah, but
So
I mean,
whenever you're adding on like prior levels, like prior support, you're looking for it to become resistance.
Yep.
Are you waiting for confirmation for that level to test and then fail, and then you're adding? Or it seemed like you were just as soon as you get a break of a support level, you're going ahead and putting a limit order at that level on a
Yeah, but I mean,
in
I
the
kind of want
instance
to,
that it's long.
I kind of want to watch how it happened, right? So like, I have my limit order here. I'm like, okay, it can either do one of two things here. It can skyrocket here to this resistance, in which case this starts to become a parabolic, or I want to see it. What I initially thought, I want to see it start to fail. I see it fail. Like, okay, this idea might start to be right. I'm placing 2 limit orders here, identifying the fact that if this thing really does fail, we have previous support. Right, you always got to be identifying where your support points are. So we have kind of a, I guess here. Yeah, you had that resistance here, support here. It ended up becoming support here. So these levels need to be drawn out beforehand, so you can realize as you're adding what your profit target is and what you're risking against. So I'm putting ads here, expecting it to come all the way down here. Right, that's a 2% move or so. So so there's a decent amount of potential there, and there's potential for an even bigger unwind because of how overextended we are here in terms of its overall trend. But so yeah, I'd be placing limit orders here, expecting that to be resistance. Continues to fail, continues to do it on elevated sell volume. So I want to be going ahead and getting more ads in, and then just covering into these areas of support. Right, comes back, test this again. Could be adding here. And I always, once we're past 10 o'clock and that 11 o'clock, I always want to be assuming it's going to put in a lower or a higher low. So I'd probably be covering in there. And then if it came down here, I'd probably be covering again. Potential to see it comes back and test this level again. So after 10 o'clock, and after 11 o'clock, you should assume it's going to just range and play off these these levels.
So why would you assume a higher low there versus like an all-day fade or something like that?
Even if my thesis is all-day fade, it doesn't matter. It's a part of my trade plan to be paying myself and assuming it's going to hold support and not do what I want.
So based on your
I'm just
strategy, is there any scenario where you would actually be able to take advantage of the entire move, given in the
I would
instance that it
so
is
like
an all-day?
I'd be taking some off here is what I'm saying.
Okay,
Because if it does want to continue and fail really hard here, maybe I'd be having even more, just bringing the average down, and fail hard, then I could be catching that down move. But I'm just taking some lots off,
gotcha.
assuming, right, just paying myself. But I'm keeping some lots on because if it doesn't want to do that, I want to capture some of that. I mean, I don't have it down to an exact science of how many lots I want to get in and
Sure.
cover. I'm just sort of tweaking that as I go, and especially as the market sentiment changes. We can sort of see how this kind of plays out on a lot of different strategies. You got EDSA and 920. I believe this is a low float, so I think this will be the first low float example. When was 920? Monday. This was Monday. Oh, okay. This is one I've done this. Oh, shit. I've done this a few times, but it's definitely risky. You can see this is a range break failure on the 1 minute within a low float. So it comes up, breaks this pre-market range, tests this $10 that was resistance that I had drawn out on the daily, right? $10 from right here. So it breaks that range, but it immediately fails and then flushes through all this support. Previous support becomes resistance.
Yeah,
Fails. Previous
one of
support becomes
those.
resistance, continues to fail, right? That's
one of those that I'm talking about,
right.
where
Fails.
that
Previous support, resistance keeps failing. But
that
with low,
initial move puts in the
yeah,
high day.
yeah. The thing is, I mean, I've done this before. Like I've had limit orders here, and then I've just purely watched like the level 2. Honestly, this shit is so stressful with low floats, though. I don't even know if it's something I want to focus on. I just want to show that it's literally working on all different kinds of stocks with all different kinds of floats in all different time frames. If you had like a 10-second candle chart, I bet you could see that it really came up here. It put in a few candles above here and then flushed down. And it may be a little bit easier to see rather than just one candle up and down. I know a lot of people who trade low floats like Ross Cameron, they use those 10-second candles, and that may be a lot easier to see. But just for the sake of the 1 minute, you could see broke out of this range, same concept, breakout buyers, whatever it may be, probably breakout buyers just getting flushed, slammed, and continues on its way down. Obviously, with low floats, you got to be careful because they can just completely rebound and do this. But I mean, it's a huge move. It's 23%. But I mean, when I do with low floats, my lot size is only 1 grand. So realizing that I can put in a lot more size if it wanted to go parabolic, I may have been interested in this one because I'm really only interested in doing low floats on fade continuations because that way I know there's resistance overhead and there's not as much volume in there. And if there suddenly does become a lot of volume, like I see like a one candle have like 2 million volume, I know that somebody just entered and I want to get out. But when these things just open up on the day of, all of these candles are going to have a shit ton of volume and it's hard to interpret what it's actually going to do. So usually what I'll do with low floats is I'll just throw them on a watch list, just low float gaps, and I'll just revisit them as they start to unwind. And I start to look at these I start to look for range break failure in a different fashion. So right, I mentioned those other ones I mentioned were sort of overextensions on the daily into resistance, and then fails to break a key level and washes out. But here, the same thing can happen on a fade continuation. Let me go to Coop. Remember we were playing SDC and we got fucked? But
Yeah, we got out pretty quick, but
yeah, but you see it's a range break failure. But this time it's on a fade continuation. So this strategy also works when the trend is down. And if you want to see continued weakness, you want to see it fail to reclaim an area that was support, was kind of supportive of here, was holding above it here, was holding above it here, found support on the first day it gapped up down here. So this area was a pretty crucial level, but now we're opening up beneath it. And so me and Coops were looking at this thing like, oh, we found some. It's at a key area of support here. We're expecting it to reclaim and squeeze, and maybe get a move up to 620s or so. But all it did was come up, and then like me and Coop bought here on the pullback. And so me and Coop were literally on the opposite side of the people we want to capitalize on these range break failures. So then we got relatively elevated volume flush, retest this support. So there's a lot of different areas you could be adding here. You could be expecting this area to fail. You could be expecting VWAP to fail. You could be expecting this level to fail. So say we wanted this level to fail, we could place the limit order here at $6. Sort of watch it do its thing. Above 6, we see a fail with elevated volume. Really good flush engulfing candle. Then say we'd be looking to place some limit orders at these areas, like this area I mentioned. I would expect this area to fail. I would expect VWAP to fail. I would expect here. So maybe I'd split up my lot entries here, and here, and then, but we're before 945 also, so I'm a little bit more willing to chase on continuation. So on a candle that closes beneath support, I would probably go ahead and mark it in. So I mark it, but not too many lots. I don't want to just completely destroy my average. Like say I had one lot here, I got in 2 more here. I'm not just adding 20 lots right here. I'm just going to add like 2 more or so, and then identify. But it's all about identifying where that area of support is that we're going to cover, so we can gauge our risk to reward. Right? We had some congestion over here at like 591. See, that's a key area that broke. That's why it was so much volume. It was a key area. So then it also consolidate. The bottom of this range was probably let's just call it 565, which it didn't exactly touch, but we could be assuming that could be our target. And as it doesn't sort of reach it, we could just be covering it. No, it did reach it eventually, but
Did you flip short on that? I can't remember.
No, we should have. But yeah, I
So
ended up. I think
at
I was
what
a part.
point-
I was a part of this sell candle when I bought
okay,
up
so
here. Yeah,
you got out on that.
yeah.
Practice support. Okay.
Yeah, I should have, because I should have identified this as. I mean, but this, because I was long, I didn't necessarily interpret this candle as okay. I could be wrong here, but I was go ahead and maintaining my bias. But I just want to also show that this can also not necessarily, or not just work when it's overextended within a range on the daily. It can also work when it's downtrending and continuing a downtrend. Especially when that downtrend is about to break a key level and there's a gap fill. So these are overextended within range examples, fade continuation examples. Yeah, let me go to LCID the next day after this day. I could be looking for a range break failure off of fade continuations, people who were dip buying it and sorts to get flushed out again. LCID 923. When was 923? Thursday. Yeah, this is our big unwind day. So now the next day, I could be looking for that momentum to continue, and I was. I remember I was sitting there with Chandler as I made this trade. So what I did here, I was expecting this level to break in pre-market. So as it retested this VWAP, I put in like half a lot right here just in pre-market. And then I put in like one lot on the test of pre-market highs. Except Thinkorswim gave me a shitty fill, so I didn't actually get the fill up there, but it was right here on pre-market highs. So this is the area I'm expecting there to be resistance. It was also kind of a pivot point here, right? The initial drop and bounce point here at 25.90. So really, this is all about just sort of identifying areas of support and resistance. So identifying the points of support where we'd want to start in, and then scale against, and add when they fail, and then points of support which are potential profit targets. Right? I think, and identifying that is really going to clearly lay out our risk to reward, which I think some of us struggle with sometimes when we don't necessarily have our designated cover spot. We're just like, oh, there's a washout, I'm in the money, I'm going to take some. But if we clearly have these beneficial risk to reward areas based on these points of support and resistance, that's where we can become consistent, and that's where we can find that our winners are winning a lot more than our losers. So anyway, so right here, I went through a few charts of how this works on overextensions, but then you can also do it for fade continuations where you want this momentum to continue. So, looking at my 5 minutes down here. So if I'm looking for points of resistance, I'm probably looking for, I want to identify points of resistance where I could be adding against, because I want to see it go to those levels, test them, and fail. So I put in like half a lot here because I thought it might just completely flush, and then I would be adding more. If it really showed weakness, I thought it might get down to like here, like below 24. So I went ahead and added half a lot here, one lot here, and then we got a failure candle and some good volume, completely engulfed it, right? And you can see it tests this area again after this engulfing candle. So if I placed, say I had two, I think I had 1.5 lots. I placed some limit orders here. I believe at that point I was in like 4 lots. And then I covered some on low of day, which was stupid because I'm tweaking my strategy now before 9:45. I'm adding now on the break of low of day because that's confirmation that I'm right. So at that point, I should be adding in more with my first covet point at this pre-market area of support, assuming always that support's going to hold until it doesn't. Huge volume break. Okay, so now I'm going to expect this area of support that was support to become resistance. It did. And I have to draw out, though, where I think it could go to. Right, we had a low of day here at 24.50.
And what was that support level from that became resistance?
This one?
Yeah. What was that from?
Pre-market, I believe. It may have also, the more these levels of support and resistance are attached, like, so say this level was a pre-market high,
right?
But it was sort of also a support level here and then resistance here. So the more times this level is tested and acts as a certain pivot point, the more I can expect it to be a crucial level the next time it's tested. Does that make sense? Right.
Yeah,
So it's tested here on a lot of volume, bounces, kind of bounces here, fails it, tests it again as support. Like there's a lot of orders happening around here, and
Yeah.
then that's probably why it was a pre-market high, right there. So now it's a pre-market high, and it was a pivot point from yesterday.
So
I mean,
the one I was asking about was just it was a pivot point of support from the day before. It was also support and resistance from the day before.
Yes,
It looks
exactly. So
Gotcha.
there's a lot of stakeholders involved at this level.
Sure.
So that's why I'd be looking to play this strategy against it. So you can sort of see kind of how I would play it based on how I've been describing. Limit order here, just kind of watch it do its thing. I see an engulfing candle, good amount of volume. Okay, I'm going to place a couple more limit orders right here. Break of low of day. I want to be adding some more here. I want to be covering here though. I want to be taking off 2 or 3 lots or so, assuming it's going to hold, assuming it's going to range and test here again. Because if it comes up here in 2 candles, or comes all the way back up to highs within 2 candles, I probably want to be adding there because that's a dramatic move. It's all about just kind of how it got there, but I just see it continue to work in my favor. Breaks down. I want to continue to scale, but just realizing though, as I'm adding, I'm ruining my average, and the likelihood of me being able to hold this all day has really reduced, and I need to get out. Probably at the nearest support point, because I've been ruining my average so much. Because like as I'm adding, my probably average. I think my average did get down to here, and that's not really where you want to be.
Hey,
because
Mitch,
it can come back. Yes.
I've got to run, but I'm going to go ahead and I've got somewhere I got to be real quick. I'm going to let the recording continue. I'll watch the balance of it when I get back. Good information. I appreciate you taking your time for what you did here.
Yeah, of course.
And I want to see the rest of it, but I'll have to watch it when I get back. But so you may end up being done, and then there'll be a big long pause at the end of this thing.
Okay.
Before I get
yeah,
back.
that's fine.
But I'll keep it recording. I don't know what the max is that YouTube will let me transfer. We're at about 2 hours, and I've done them longer than that before, so I think we're okay. But just do your thing. I'll check it out when I get back. The balance of it.
Okay.
All right.
Thanks, Moto. All right.
Let's
See
see,
you.
Moto.
Later, man.
Yeah, let me just show you more examples as to how this can work on fade continuations. I mean, it did the same thing the next day, according to what I wrote here, 924. That's right. If we're expecting this momentum to continue, opening beneath resistance. Where did this resistance come from? It was this area's day of support. You see a lot of orders here. So it attempts to break back into this range, and it doesn't. So you could see sort of, how you'd be adding accordingly, and then where your profit target would be based on how you draw it out. So I hope you guys are kind of getting an idea of how of how these all sort of start to play out the same way.
Yeah.
Because previous support just becomes resistance, but I don't want to be scaling in too much because I'm expecting it to go against me, and I want to be covering on areas of support and only scaling in on pops or strong continuation within the first 15 minutes. Let me show even a few more examples. MMAT, that's sort of a mid cap one, 923. What day was 923? Thursday. This day. When I have a dotted line, that means VWAP Boulevard. So this is a pretty dramatic move here too. So it says 28 cents. That's about half an ATR within less than 10 minutes before open. So that's sort of also a nice little parabolic to go along with a range break failure. And you can see the unwind that came here.
Did you put that
previous support.
ATR script in the chat?
Yeah.
Did I see that?
Did it come in? Yeah, it's right.
So. Saw a link or something.
I'll repost. I think that you just copy and pasted it. in
Yeah.
tiers, I think.
All right,
I'm
cool.
pretty sure that's the one. I copy and pasted it from. Yeah, and it should be the last 15 days is what I do it as.
Okay.
They tier out the last 15 days. So I mean, hopefully it's kind of because I mean there really wasn't that much volume in it on this day, but you mean even if there's not that much volume and even if it's relatively not that overextended, it's these kind of trades play out all the time. Right? You just have to sort of realize there's maybe not as much downside potential here because what day was this? Thursday, this day? It's like on this day here, really sort of depreciated within this trend. But the idea here would be fade continuation. So we maybe have this on radar as fade continuation risking against this, or where we'd be interested if VWAP Boulevard gets tested. Comes up, comes back through on some elevated volume, fails. Maybe we could expect this VWAP Boulevard to remain resistance. Although this one may not be a great example because you do have to realize how sort of far away the highs are here. And then there's really not that much resistance until 560. So you have to trade these logically based on what sort of resistance is above it, you know, and then where your profit target is. So maybe this isn't one that we necessarily want to be hammering into because there's sort of a gap fill within this range here. Like there hasn't been much activity here. Could easily go up to 560. Or maybe I guess this would be like if you drew a line here, you could see it also tested this level, previous support. But yeah, hopefully as I just show some more examples, it starts to just kind of make more and more sense. And that's why I shared this document with you guys. Like I sort of labeled them as low floats, fade continuations. It was just mid float. Yeah, this is the one I was just showing. The SDC, that'd be fade continuation. And if you just kind of want to even go through and even just take, even if these images are kind of blurry, just kind of go through them, go to these days, draw out some lines that you think are important according to pre-market, the days prior and the daily, and then watch how they test those levels, and then see where you might be covering based on where there's support, or maybe where you might want to be adding based on where there's resistance. Okay, did this make sense? Do you guys have any questions? I bet you do. I was rambling for a lot there.
I feel like I've just been asking the questions that I have as you were talking, so I don't know if anybody else does.
Yeah, for me, I'd like to know, like, how do we identify what stocks to do these in? Like, are you just looking for the hot stocks of the day? Or are you looking for, are you using some sort of screener, or what are you doing?
So I'll be, so I'll just stocks that that are like big movers. I'll put into like, so I have my large mid cap list, and I'll have my low float gappers. Anytime there's a low float gapper, I'll just, like this was MRM, I think from Thursday or whatever. I don't know what day it gapped up, but I just throw it on here. Even if I don't want to play it the first day, I might be interested in playing it as a fade continuation later on. Or if, I mean, AMC is pretty much always on watch. But anything that sort of has a significant move, like Uber, like I'll be keeping my eyes on this one because you can see it's pretty overextended within a range, although there's a lot of volume. So maybe I wouldn't expect this to hold. Maybe I'd be waiting for it to come up here and then give a range break failure because you have the 200 SMA and you have a lot of action up here. But I mean, it's all relative based on the charts, and you know, it's just sort of at your discretion. And I kind of want you guys to start to think about these in the same way that I am, and so maybe we could start thinking of ideas and we could talk these out in pre-market and maybe make a game plan on how we want to attack them. But once like something just has a big move, that's just when I start putting it on radar, and that's when I'll just keep an eye on it every day and place price alerts around. Like you see, I have price alerts in here. Like I just have price alerts at key levels because when it comes to it, I want to see what it's doing when it gets there. Like like Sava's been a big mover. Like when Sava had this huge dump, like that was on radar for quite a few days. And then when it came back down to the support level, an alert came off and I played it to the short side for a breakdown. Or what else has been moving?
So basically, you just take whatever's hot that day, and then
It's not even
almost
just hot. Yeah, whatever's hot that day, I'll throw it on the list and I'll keep my eye on it
yeah, you just kind
for
of
a
file
while.
it away into
I'll just keep
predefined
yeah, and
watch lists that you have.
I'll just keep my eyes on them, watch what they're doing, watch if they're at key levels, and then trade based on that. So like I don't know, something that's really, I mean, this thing has no liquidity. But maybe MRIN had a huge squeeze day. Kind of held, but if it continues to fail, maybe there could be a range break failure based on 10 or based on this level down here, which was 967. It was this topping action area here, 960. But like just sort of keeping, it's like what Nate says, just staying familiar with them, just drawing out the lines that were key areas, key inflection point areas. And then when you revisit them, you just look to make plays based on your bias around those levels. So that's in essence all I'm doing here. It's just looking for it to break above resistance, fail, and then I catch the unwind. CCJ was actually a good example. CCJ was a fade continuation, right? Super overextended, then begins this unwind, comes back. I mean, you can see it even happening on a daily time chart, right? Comes up to, I don't know where I had this line drawn in from. 3 years. Where the hell did this level come from? Over here, from a long ass time ago. But you can see it comes up, breaks just above it on an overextension, then starts an unwind process where previous support becomes resistance, continues to unwind, right? So you can see it happen even on a daily. So I guess if you wanted to play it like on that sort of time frame, but I wrote down CCJ 922 gap fill and swing potential because of the gap fill. It's also CCJ is a uranium play, so it's kind of nice to have stuff that moves in sympathy. You can watch them all together. If they're all down together, you can have extra conviction that they're going to keep going down. Or but yeah, so 922. What day was that? Wednesday. This day. Probably a little bit more obvious on the 5-minute, or maybe even 15-minute. You see, it's testing this level here, right? If we're expecting failed follow through momentum, or we're expecting this to become resistance on the daily, this is the key level we're looking at. We see this, actually a shit ton of volume within there, and then failure, and then previous support becomes resistance, breaks low of day, but then this also has an extra little gap fill because you sort of had all this area right here. So there's some extra downside potential to this one. So that's why I wrote swing next, could be a swing potential, right? We want to identify where could it go while we're getting in and when we're interested. So like CCJ came on radar when all this volume started coming in, and I was actually playing it to the long side for the breakout continuation. But it's just something I kept on radar because it had all this volume and it was super overextended within this range, and then it gave some good unwinds and range break failures and breakdowns after. So that's how I'm sort of looking for these. Just as they pop up and as the momentum comes in, I'm constantly watching for the next few weeks to see if there's more plays.
Gotcha. Yeah, that's good stuff, man. I need to be better about drawing out lines like that, because a lot of times I do that mentally, just like as the days, progressing. I'll be looking at lines, but I rarely draw them on the charts, and so it's probably why I struggle with having conviction at certain levels, because it's easier for things to just kind of fall off my radar if I'm not seeing them visually
Yeah,
on the chart like that.
It's really helpful just to draw in those really crucial levels. Like you can expect this level to be a really crucial level, and you just slap an alert on there for whenever it visits it. You don't have to necessarily keep your eye on it. You would just see that, like, okay, we got a huge flush, a gap fill, there's a lot of weakness, and this thing was just overextended. Maybe be looking for fade continuations. So I'd want to see what it does when it tests this level, which was support here, was resistance here. Ergo, lots of stakeholders involved on this price level, like we mentioned before. So when it comes up and it does test it on September 22nd, we watch what it does and we see some confirmation and we make our plays accordingly. But we just have to realize what the downside potential could be. And then realizing that if there is a ton of downside potential, that's where we could, like I mentioned with like DraftKings, that's where you want to leverage those positions, put on like puts or something like that, or put on more size.
Sure.
I mean, that's essentially it. I mean, I shared this document and I shared this document. So if you want to keep looking through them, shoot me any questions you have, even about specifics or even just anything. I just kind of want all of us to sort of, I mean, if you guys don't want to play this strategy, that's fine. But I've found about 73% success rate so far on this. Obviously, a lot of this is just at my discretion based on levels that I'm drawing in and things like that. So it's not an exact science.
Yeah, no, but based on like everything that it's not like you're just, like you said, there's a lot. You can tell that there's a lot of thought and plan that goes into it that kind of backs up your thesis. So it makes sense. It kind of works to my strength. I typically look for those reversals near the top of a range to fade back off. This kind of just adds a lot more guidelines and stuff to it. So I like the strategy. I would love to, review it a little more and be able to add to it.
Remember you were mentioning RWLK, right?
Yeah, RW. That was kind of like a midday type.
Yeah. Like
play.
I think you said you like had a lot in right here, and then you covered some down here, right? And then then the rest. But like, imagine if you played it this way: one lot at the VWAP Boulevard. I don't know if it was VWAP Boulevard. It was just resistance from over here. I misdrew this line.
Yeah.
This is not VWAP Boulevard. But imagine you just played it this way: just one lot right there. You just watch it do its thing up there, not really caring. But then you see this candle, the flush out, and you see it struggle here, and you could place ads here, just a few, and you see it flush again, and you could place some more ads. At this point, you got to be thinking target area of support is over here, and then low of day, and then boom, it cracks the whole thing. You played on a wider time frame. I don't know what sort of percent move that is, but imagine it's a lot more. But you just got to be a lot more patient. 18% from that 16% from that resistance point.
Yeah, that was an example. I saved that chart. It was an example where like resistance support became resistance like over and over and over. Basically until it got down to around that 240-ish level, but
Yeah. And I mean, like, it does it on all time frames. Like,
yeah.
this was support right here.
hmm
Didn't exactly test it, but kind of testing it.
But after that big red flush candle right there,
Yeah,
that cracked
you can
whatever
see
it
the
was.
heaviness. It's just not
Yeah,
going anywhere. You can see
that.
the elevated cell volume on these stuffs right
Yep.
here and here. These are stuff candles, and with
Yep.
elevated volume. So you just kind of assume that your thesis of it failing here is right based on that price action.
Yeah.
But you kind of have to decide what sort of time frame you want to play it in too. And like, I'm a super impatient person. That's why I've found quite a lot of success with these before 9:45 plays, because I just like boom, 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 add, cover here, add, cover, and then I'm all out. Because
Okay.
I don't know, I'm just an impatient person. So, but
No, I'm
like
the exact same way.
but the money's in these moves. So I'm trying to train myself to
Bro,
make.
you sound exactly like me as far as like where I've been for like the last year or so is like I've been in hardcore scout mode because that is my personality, like very impatient. Like
Mhm.
I see the move, I see that I'm right. I want to get paid right now, so I'm gonna
Yeah.
take it off. But then I saw at least earlier in the year I was missing out on just massive amounts of I was leaving so much money on the table. So then, like a few months ago, I tried to start shifting to a more patient mindset and trying to identify those opportunities where you can just sit back and stay patient. But
That
then
my
the market changed again recently, and you have Nate and everybody saying, "Well, this isn't a market you can stay patient in if you're short." So I've just been kind of all over the place mentally trying to figure things out and. Um, but
I mean, like, for me, like, because I've always had that impatient personality, and like adding here, like adding there, like especially right off the open and stuff, which was working for me off the open. But then when I tried to bring that mindset into like later in the day, I was like, okay, boom, add, let's go right down here for the continuation. But like, fucking idiot, it's 12 o'clock. You're not going to get continuation that quickly. And then when
right,
it's coming back up here, I'm like, oh no, what if it bounces? I just added down here. And like, you just have to realize you have to adjust when you're later in the day. You have to be patient and sit there for how many fucking candles is that? One,
through that
2, 3.
midday
Yeah,
that midday lull.
that's 15 minutes. Like, I have to sit there tell myself to wait 15 minutes for this support test. That's what I have to do. You know.
Yeah,
So, but yeah, I mean, I've struggled with it. I'm obviously not an amazing trader or anything. Just trying to get better. And I'm hoping that we could all sort of
I hope so.
take on some similar ideas, and then sort of map out these plays and these plans together, and then we can start beginning to talk through them together. And like, well, I kind of like this resistance area here, but there's a pretty big gap fill from that resistance point to the next resistance point. Maybe we shouldn't over leverage on this entry, just like things like
yeah,
that,
and
where
I
we can shoot back and forth and play our strategies out wisely.
exactly. Yeah, I think that was kind of the whole point of this thing is that we all kind of get on a general like same page, and then we kind of have 5, 6, 7 sets of eyes all watching the same thing, and maybe someone identifies a key level that we would have missed on our own, and then we can kind of continue to
Yeah,
tweak and
exactly. Like,
refine the
I can
strategy.
miss, like, some of us can miss levels and then point it out to each other. Like, oh, what about this level, this pivot point from the other day here? And just like, the more
Exactly.
eyes we can have on it, the more people that we can have trying to play it, the better we can be with the teamwork. But yeah, so I guess I kind of threw a decent amount at you guys there, but I hope it makes some sense. And if you guys start to see it, if you guys start to see these plays, hopefully you can start calling them out for each other. But I'll definitely, throughout the week, I'll definitely be calling them out as I think they're about to happen. And if you guys just want to watch and then maybe think through them logically yourself. maybe you'll get some.
Yeah, I definitely want to see some play out. Like, because you called that Lucid one out on Friday or whatever day it was where I played Neuro. I think it was Thursday. But I didn't have the conviction you had for yours. That's why I played Neuro. It would have been nice to.
Yeah, but
like,
now you
what
see
you saw.
exactly what my logic, what my
Yeah,
thinking is, right?
yeah.
Like where I'm at, where I want to add, where I want to cover.
Yeah. No, I like it.
Where I'm expecting it to bounce. Yeah, so that's in detail what I'm doing, what I was doing at least on that strategy. But I think I've been like finding a decent amount of success in this strategy. So I think it's going to be the only one I size into at the moment because I keep wasting money on other strategies, honestly.
Sure.
So
No, I like it, man. Well, I gotta hop off like Coop.
Yeah.
But yeah, Mitch, I appreciate you sharing all that with us, dude.
Yeah, of course.
Yeah, man, thank you.
Yeah.
Hopefully we can all get rich now.
Yeah. Yes, that is the plan.
Yeah.
I'm gonna go watch Nate scan, dude. I'll see you guys tomorrow.
All
All
right.
right, sounds good.
See you guys.
Yeah, I'll catch you guys later.
Appreciate you guys. Thanks.
Later. Thank you.